Hi everyone, it's Carl, the Fly Agent. Happy New Year's. I want to kick off 2026 with a quick VIP market update where we look at what happened in 2025 and give you a forecast, not based on feelings, but based on facts and trends for 2026 housing market nationally and on more of a micro level with the Phoenix market. So let's start nationally. 2025 was another unusual year for real estate. We've had historically low volume transactions, but still relatively high mortgage rates, which is driving that. And prices, even though we have high mortgage rates and low transaction volume, they stayed relatively stable. So why? It's because inventory never really flooded the market. We still hovered around 23 to 26,000 homes here in the Phoenix metro area. A lot of homeowners are still locked into their payments, their low interest rates. So unless there's a strong necessity or need to sell, they're not really selling. So instead of a crash, we saw low activity, but still price resilience. We did see some pullbacks in some micro markets, but buyers are struggling with affordability. Sellers are holding on to value, and the market stayed relatively stuck in the middle. So here in Phoenix metro area, the one key metric that I follow closely is the months of supply. This is also called absorption rate. So say if no new sellers came on the market, how long will it take for the buyers currently in the market to eat up all the listings? And Phoenix in 2025 hovered around 4 to 5 months of supply, meaning if no new sellers sold in about 4 to 5 months, all the inventory would be wiped out by the current demand of buyers. We never saw it dip below 3.9 months, and that was very early on in 2025. This matters because if you're below 3 months, it's a strong seller's market, and prices will go higher. They'll push higher. If it's around 4 to 5 months, it's a relatively balanced market like we had in Phoenix. And if it's above 6 months, it's a strong buyer's market. So 4 to 5 months is relatively stable, but compared to what we've seen in the past years, buyers had a lot more negotiating power in 2025, and even still right now, as the interest rates haven't drastically dropped in the recent months. We saw 6,000 homes sell in October, and why that's important is because that even though inventory is still relatively higher, good homes are still selling fast. And I saw this personally with my clients, are looking in very specific areas. Not a lot of inventory pops up in those neighborhoods. And when they do, they get picked up relatively fast, especially if they're in good shape. So the problem with buyers is because they think inventory is so high, they think they can wait, when in actuality, the average homes are sitting and the great homes are still moving quickly. So the buyers who hesitate missed out on the best opportunities. So yes, there's more inventory, but urgency still exists when quality meets price. Okay, one thing that I follow closely is consumer debt as well. So one big wild card going into 2026 is credit card debt is near all-time highs right now. And buy now, pay later programs are being used more than ever, and many of these don't show up on credit reports either. So what does that mean for real estate? That means buyers are going to be more payment sensitive. Concessions, rate buy downs, and incentives matter most right now. So if you're struggling to sell your home, offer those to buyers because they're very payment conscious because there's high consumer debt. And even though they're not showing up on the credit reports, meaning lenders might not see that on their balance sheet, it is affecting how they run their households. This may not signal a crash, but it does signal a change in buyer behavior. Another big piece of the puzzle is rent. In 2025, rents in Phoenix actually came down in many areas. And the reason is oversupply. There's a lot of new apartments going up. I, unfortunately, personally invested in an apartment. It didn't do very well in 2025. Wah, wah. Renters feel less urgency to buy. Investors get more conservative and cash flow expectations reset. So the one reason we haven't seen supply tighten up aggressively yet is because rents are relatively still low and there's an oversupply of rents. In fact, a lot of apartment buildings are offering good incentives to get more tenants in their buildings. So what does 2026 look like? The major forecast to expect is modest price growth, nationally around 1 to 2% maybe, and gradual improvement in affordability if the rates ease. So if we see a massive cut in rates, that'll be really good. It's going to be more balanced. It's not going to be a boom or bust situation, we think. It'll probably just be a steady increase in home values. If the supply stays around 4 to 5 months like it did for 2025, prices are going to remain stable. To see a true seller's market again, like we saw, post-COVID, the absorption rate needs to fall below 3 months. So right now we're at 4.5 or so. So it would need to drop drastically. Right now, the average days on market is close to 3 months, which, post COVID, it was like 20 days. So it's increased 3 to 4x since COVID days. And, we would need a drastic pullback in interest rates, and we need fewer sellers and a strong migration into the Phoenix area, or a combination of all those three aspects in order to get a strong seller's market again. Until then, Phoenix remains a strategic, opportunity-driven market. So if you're a buyer, there's a lot more opportunities. If you're an investor, there's a lot more opportunities, and you can be a little bit more diligent as you look at that inventory. So the takeaway for 2026 is simple. Buyers, you have leverage, but you still need to move fast if you're targeting a specific micro neighborhood in Phoenix, because the good homes are still going fast. Sellers, pricing, and presentation matter more than ever. The sellers that are trying to test the market are going to suffer the most. So if you're going to test the market, test it quick and make price improvements quickly, because the ones that sit on the market are going to be hurting the most. Investors, conservative numbers win this year. Stick to your numbers, stick to your guns, and you probably will find that perfect property. If you want a hyper-local snapshot of what's happening in your neighborhood, please reach out. If you're a buyer or seller that wants more information on what to do with their real estate goals, please reach out. Over at our current brokerage, we have a commercial division, a rental division, and a residential division, so we can help in all those areas. Thanks for watching, and we'll talk to you soon. Peace.